Well, the Biden administration this week saying there's nothing to see here, no problems. Bidenomics is absolutely working. Inflation is coming down. Janet Yellen recently saying the banking system is fine. Yet we're hitting $34 trillion in debt. We are now paying trillions of dollars just on the interest payments alone on the debt. How exactly is that sustainable? And is everything fine? Nothing to see here. Let's ask Peter Schiff. I've been wanting to get Peter on the show for a very, very long time. We reference him often. It's an honor to have Peter Schiff here, who is the senior economist at asset management at Euro Pacific Asset Management. Peter, great to have you here on the show finally.
Clayton, great to be here. And first of all, when Joe Biden is out there talking about how inflation is coming down, first of all, he needs to accept some responsibility for how much it went up, number one.
Right.
But number two, the main reason that we saw that big drop in headline CPI, where it got from 9% to 4%. And by the way, 9 wasn't 9, it was actually 18. If you measure inflation the way they measured it back in the 1970s, if you took the same CPI that was used back then and used it now, the actual price increases are double. So we didn't really go from 9 to 3. We went from 18 to 6. But the reason that happened was because we got a 50% drop in the price of oil. That's what really pulled down the headline number. And the reason that oil prices collapsed was because Biden decided to raid the Strategic Petroleum Reserve and he dumped oil on the market. That reserve is now at an all-time record low as far as how much supply. We have 20 days supply left. The absolute level of the crude in the reserve now is the lowest since in 40 years, even though our population is 50% higher than it was 40 years ago. So we've really tapped that out. Now that we're no longer dumping as much oil, the price is up 40% in the last 3 months or so. We're almost back at $90 a barrel. So all that progress is about to be reversed in the headline CPI. Meanwhile, the core, which excludes food and energy, never really came down. And now it's headed back up. So this myth that the inflation problem is over is wrong. It's just getting started.
That's the fear. I mean, so this is just getting started. People are thinking, well, we're heading into some good times now. I don't know where they're seeing the good times with mortgage, with interest rates where they are, with the demand for mortgages hitting a ridiculously low number. The Fed continuing to push this idea of printing more money. We're continuing to print more money. Now we're moving towards a central bank digital currency. I don't see how I don't know what they're talking about, that we are in a good period right now.
This is all spin, right? This is BS. This is what politicians do. But if you look at the actual facts, first of all, mortgages are now about 7.5%. They're going to go to 8% before the end of the year, probably. But by next year, they could be back at double digits. But they were down in the 3s. So home prices are completely unaffordable at this time based on where mortgage rates are. The only reason people could afford these high prices in the recent past, was because mortgage rates were so low. Credit card debt is at a record high, but credit card interest rates are also at a record high. People are paying more than 20% interest on their credit cards. So people are struggling with debt service, plus prices are rising. That's why so many people now are moonlighting. You have a record number of Americans who are holding down multiple full-time jobs, and you also have record numbers of Americans that have second jobs and third jobs. Why are Americans working so many jobs? It's because that's the only way they can pay the bills. People don't want to have 3 jobs. They want one job. But unfortunately, they can't get by on one job anymore, so they need to have all these other jobs. Meanwhile, Biden is bragging about all these jobs he's creating. People don't want these jobs. They'd rather not need them. We're creating jobs for people who already have jobs, but we still have an army of people who aren't even in the workforce because they're living off of a government check. And so the people who are paying taxes have to work that much harder so that the people who aren't working can continue to consume without producing.
And so inflation will continue to go up. I mean, for the average consumer right now, for the average person watching our show who is struggling to put food on the table, the bills for their average, thing of bananas, their food, their steaks that they're buying for their family, the food that they're trying to provide is now double, triple in costs. And to your to your point, the U.S. dollar has dropped dramatically in value, so they're having to get multiple jobs to cover this difference now. The rents have gone up,
Right.
and they can't afford it. So what happens now to the average consumer? Where's the bottom?
Yeah, and the dollar is losing purchasing power here at home, but on international exchange markets, the dollar has still been strong relative to the euro or the yen or the pound. But of course, those currencies are also losing purchasing power because inflation is happening in those countries as well. Now, U.S. politicians try to say, you see, this proves it's not our fault because inflation is a global problem. No, all the politicians and the central bankers made the same mistakes. They all had interest rates down at zero. Europe even had them negative. Everybody was doing QE. That's why everybody is suffering from inflation. Inflation is the tax that we're paying to cover all of the government spending. But what I've been advising people to do for years is to stock up on food now, because why put your money in the bank where it's going to depreciate and earn no interest? Just think about the things you might buy next year or 2 years from now that won't go bad, and just buy them now. I mean, that's better than leaving your money in the bank. And by the way, all the banks in America are insolvent. The U.S. Federal Reserve is propping them up. We began what would have been a much worse financial crisis months ago when you had Silicon Valley Bank and Signature Bank and these other banks fail. The reason they failed was because they loaded up on government bonds and mortgages when interest rates were really low. And then when interest rates rose and depositors wanted their money back, the banks didn't have it because they had loaned it out to the government and on these mortgages, and the mortgages and government bonds lost value. And so the banks, were insolvent. And so the Fed bailed them out. But all the banks have done the same thing. I mean, think about years and years and years. All these Americans went out there and refinanced their mortgages at 3%, 3.5%. And now the banks own those mortgages, but their cost of money is now over 5%. When interest rates were zero, the banks were making a lot of money on those 3% mortgages. When interest rates are 5.5%, they're losing a fortune. So they're all bankrupt. And if the Fed continues to hike rates to keep fighting inflation, or even leaves rates where they are and doesn't cut them, all the big banks that we bailed out following the 2008 financial crisis, every one of them is going to fail.
Every one of them is going to fail. What does that mean
Yes,
for
all those big banks without the government bailing them out?
So where will people put their money? I mean, and I think if we've been talking about this for months on the show, especially after Silicon Valley Bank, it's, you go to get money if you go to get money out of the bank doesn't have your money in the first place. I mean, it's a joke that the bank is
it's
actually
all loaned out.
Yeah, it's all loaned out. So what are people going to do with their money if they have some savings? Or would you advise people to take out what cash they can now and store it locally, turn it to gold? What would you do? Buy food?
Well, yeah, there's no reason to leave your money in a bank. I mean, at a minimum, you should pull it out and put it in a money market fund somewhere, because you can earn over 5%. The banks can't afford to pay you because they're losing too much money. And that's also a problem for banks, because everybody wants to take out their money. And so their whole businesses are imploding. But it doesn't make any sense to leave money in a bank for other reasons, because number one, inflation is going to erode away the value of whatever you leave there.
Right.
And you have two possibilities. Your bank is going to fail, and you might lose the money, even if it's insured by the FDIC. The FDIC is broke.
Right.
And so it's possible that all these banks fail, and there's no bailouts because the FDIC is bankrupt. So either your bank fails and you could lose your money, or your bank doesn't fail because the Fed bails everybody out by printing money. But in that case, the value of your deposits collapse. And so you lose to inflation. So either way, you're guaranteed to lose if you keep your money in the bank. So why not pull it out, at least the money you don't need for short term to pay your bills, and then do something else with it? One thing you can do is buy gold and silver. And then what I do with most of my clients is I manage their portfolios, because we don't keep all of our money in gold and silver because they don't generate any income. I like to buy dividend paying stocks outside the United States, where the stocks are paying dividends of 6, 7, 8, 9%, where these dividends are derived by selling goods and services around the world that consumers need, not the ones they're going to give up because they don't have any money anymore, but the stuff that they have to buy no matter what the price is. Maybe they'll buy a little less, but they have to buy it. There are some things that are discretionary that you don't need, that you only buy those things after you pay for your food, after you pay for your energy and your rent and your insurance. So we don't kind of invest in those businesses because they're in a lot of trouble, because the consumer's in a lot of trouble. So you got to buy value. You got to get out of the U.S. You got to be thinking about inflation. Inflation is a tax, right? It's how the government funds the deficits. All this stuff that Obama is promising the voters, it all costs something. And if he's not going to raise taxes, he's going to raise inflation. And so every time you go to the supermarket and prices are so much higher than when you were there before, that difference is actually a tax. That's how we're paying for this. So when Biden says that, well, we're not going to tax anybody who makes under 400,000, that's a lie, because almost everything he's spending is being paid for by the people who make under 400,000, because they are disproportionately impacted by the inflation tax, because they spend almost everything they earn and then some, so they hit that tax. But if you're an investor and you don't want to pay the inflation tax, you got to get out of the thing that's being taxed, which are your US dollars, your US Treasury bonds, your municipal bonds, your corporate bonds. Anything that's dollar denominated is subject to the US inflation tax. So I want to avoid that tax by avoiding US dollar assets. And that's what we're helping our clients do, at Europe Pacific Asset Management.
I'll get you out of here on this, Peter, which is where inflation goes over the next 6 months, a year from now to 2 years. Where do you see the long road of inflation going? Maybe a number projection and what people might expect in this economy.
Well, it's got no place to go but up. And first of all, you have to understand what inflation is. Inflation is an expansion of the money supply. That's literally what's being inflated. That's where the word comes from. Inflate means to expand. So what are you expanding? Because you don't expand a price. Prices go up, they go down, but they don't expand. It's the money supply that expands. And if you get an old dictionary, a Webster's dictionary, and you look up the word inflation, it will say an expansion of the money supply. That's what it is. Now, what happens when you expand the money supply is that prices go up. So rising prices result from inflation. They are not inflation. They do not cause inflation. They are caused by inflation. Now, who expands the money supply? The Federal Reserve. Why does it do that? To finance government debt. So it's government deficits that are the drivers behind inflation. Now, the deficits right now are over $2 trillion a year. We've never had anything like that outside of a recession. In fact, even in normal recessions, we don't have deficits this high. We're running $2 trillion deficits. They're going to be $3 trillion by this time next year, even if we don't have a recession. But if we do have a recession, which is more likely, these deficits are going to rise to $5 trillion a year. Where's that money going to come from? It's all going to be printed by the Fed. Inflation is going to get so much worse because it's the only politically expedient way out, because otherwise they have to slash spending. They're going to have to cut Medicare, cut Social Security, cut defense, cut government pensions, massive cuts to spending. None of these politicians want to do that. They also don't want to pass huge middle-class tax hikes. They don't want to impose a national sales tax. They don't want to raise the payroll tax. So the only way they can get away with this is by raising the inflation tax. So they're going to print way more money, and that means prices are going to go up even faster. And the reason that the politicians like to lie and pretend that inflation is rising prices is because they want to blame somebody else for the inflation. So when oil prices go up, they can blame Putin, or they can blame OPEC, or they can blame greedy businesses that are gouging their customers. But if they properly define inflation as an increase in the money supply, they can't blame anybody but themselves, because Putin doesn't increase our money supply. Some U.S. corporation can't increase our money supply. Only we can do that. So inflation is homegrown, and the rest of the world is simply reacting to the inflation that we export.
Troubled times ahead, absolutely the case. And I'm glad to hear what you've been saying about this and how people can protect themselves. We've been trying to echo a lot of these same pieces of advice here on the show for many, many months. Peter Schiff, thank you so much. It's been a long time. Glad to have you. Hope you won't be a stranger, and we hope that you're able to come on the show more regularly.
Yeah, thanks a lot, Clayton. Anytime. Happy to be a guest.
Thank you so much for watching this segment here at Redacted. We are live every day at 4 p.m. Eastern Time, trying to share the stories that the mainstream media will not cover. You should also come over and join our community of Redacted Rebels over at redacted.inc. That's our private locals community where we can share exclusive content that we simply cannot share here on YouTube. Come over and join the rebellion together right now by going to redacted.inc. We'll see you next time.